Traders, what's going on? Jamie Saettele here. It is the midweek strategy webinar for SB Trade Desk, and it is November 8th, 1 year after the U.S. presidential election. And markets right now, FX in particular, it would seem kind of being held hostage the last 2 weeks or so by um, the tax reform and rumors here and there and this and that, and people just kind of waiting for clarity, I would assume, here on the dollar, as we've got very, very tight ranges. So first, let me know that you can hear me, and then we're going to get started. Can hear you, says Peter. Okay, great. All right. So we're going to start, as usual, with a couple dollar things here, and we're getting into a very critical, possible turn, here for the dollar, potentially turning lower. Unsure if we get one more push or not, but if we go back, I believe this was in an update a couple days ago, but everything has been dominated in the US dollar, the FXCM index, by this trend line parallels that extend off of the 2011 and 2014 lows, right? The median line from that, a lot of very important turns and a lot of very frustrating price action around it, right? But this is back in 2013, very early 2014, in late 2013, and you can see just how frustrating that was, right, until we broke down. So what I want you to do is concentrate on these. You see the red parallel that's extended from that December 2013 high and then would cross through the January 2014 highs, right? And that was like 4 different weeks where it did that. So if I scroll in, go to even a 60-minute chart, and you can see this is that parallel. Okay, I'll put it in bold so that you can get a sense of it, a little clearer sense of it. And we've actually touched it the last couple of weeks, so 10/27, and then again on 11/5, which would have been, I suppose that would have been Sunday, right? Yes, it would have. So the dollar, and I don't know if there's headlines coming out right now or not, but as I'm speaking, the dollar's starting to turn up here. You got dollar yen ticking up, euro dollar ticking down. Probably a rumor of some sort would be my guess, because that seems to be what the market is focused on. But we've traded into this parallel now twice, right? So on the initial head and shoulders breakout, that is being talked about a lot, obviously on Twitter, because it's so clean. So that that's still valid, but we're kind of running out of time to really make headway on dollar strength, at least in my opinion. Several reasons for that. You do have seasonals that are bullish the dollar really for the next couple of weeks, but the analog we've been really focused on here with DXY, which was very useful in identifying a low back in back in September. So here we are now, trading right up into this level, okay, and where we could be topping. I had it originally a week that starts 11/13, because that's if you match up the high over here, it would be the next week. If you do a little closer and match up the lows, though, you get this week. So this week, like now, or next week, to me, would be the times when we could really be looking at a possible turn or what have you in the dollar. And there's also this fork, right? If we move this down, you can see it, but this is DXY, and this is the fork. If we use the high from 2015, go to the low from May of 2015, and the high from early this year, very beginning of the year, you can see that we're now on the median line, and we have been for 3 weeks now. So it's really a big energy point in the market, and I'd say that that's pretty obvious given that the market continues to trade on this level. So if we zoom into a daily chart, you can see lots of important things happening on this median line. This is back in March 2016. This is July of 2016. This is the election of this is a year ago, right here. And then of course it was support back in very late June of this year, and eventually the breakdown sent us somewhat of a free fall in the dollar. So we're right back to it right now. So big test here, in my opinion, for the U.S. dollar. Question being, of course, do we have one more kind of poke higher into next week or not? That question is not something that I have the answer to. But yeah, I watch with kind of bated breath here on the possible resolution. So just know that that's where we are right now in U.S. dollar. I think it's quite a test, for this index and the dollar in general. So here's the daily version of that, and same thing again, right? You match up the lows, you're kind of there now. Match up the highs back here, and you could see that maybe we have a couple more days of push into, like I said, 11/13, which would be Monday. Another thing to be aware of, the 200-day average in DXY is up there, and probably in US dollar as well. So let's throw a 200-day average on this chart. This is a different chart, and I want to explain this one quickly. Okay, so there's the 200-day average in DXY. It is a bit higher. And if we scroll back, and this is kind of why, this would be a reason why a very big picture kind of deal here, why I think the dollar top back in January is actually the top, right? Because that's a question too that many are wondering: is this just a pullback before we go higher, right, in this uptrend, or is this the top? Like, are we going lower for the next number of years in the dollar? The reason I think that we have really topped, that doesn't say anything obviously about near-term direction, but the reason that and this is more of like an investment macro thing, right? This has to do with kind of the bottoming of the commodity cycle, maybe the bottoming in the metals, right? Gold, silver, these are big things here. Reason I think that we've actually really topped in the dollar, like on a multi-year basis, like on a cycle basis, is the fact that the rally from 2008 in DXY took the exact amount of time and really followed a pretty similar path. This is stuff that we were looking at last year, of course, but if I do this, if I do the paint bar function on TradingView and just scroll it over, generally speaking, a big up, down, and 7 waves up, right? 1, 2, 3, 4, 5, 6, 7. And you can see that the top was really the week of the same, the same top on the analog. So essentially, you've had your cycle play out, is my kind of opinion there. So I maintain that selling dollar strength is probably going to serve us well over the bigger picture longer term. And here's another thing. If we look at this now, that we're going to look at it on both linear and log. So this is linear, and if I look at it on linear, here's our trend line back from 2011 and 2014. Again, this is DXY. This is not US dollars. This is DXY, so a little different. And extend that off of the 2012 high from July. Well, that of course was perfect support back in May of 2016, the 2016 low, right? Well, we're back at that again. So there's a lot here, okay? Now, if we go to log scale, it may be a little higher, right? Specifically on, the election low, which obviously has already been hit in US dollar, but not DXY, okay? And that would be 95.89. So again, the question remains here. It's probably why I'm really kind of in an uncomfortable spot trading-wise as it pertains to, the euro specifically, but really anything dollar-related right here. I can envision us turning here, or one more shot to the upside, before the dollar, kind of craps out again. So I wish I had a better answer for you right now, but I don't. But let's go to the individual currencies, and I actually we'll look at some euro and yen, but then I want to spend more time on the metals today, because we're starting to see interesting action in gold and in silver. And of course, the crude market's been on fire. Tweeted out that 200-week average earlier. That is, a little higher. It's like $2 higher in crude, and that might be where we get a decent pause in crude oil. Okay, so going to euro, really very, very, very little has changed over the last 2 weeks, right? You've got this head and shoulders that everyone is talking about. Remember when we did get the breakdown back here on ECB, we had thought, or it kind of, had a level that we were thinking about. 1460 was that level. Was hoping that we would be there by now and already turned off of that level, because you did have this parallel on euro, which is so clean. Okay, that's just a trend line that goes back to the 2017 low and the April low, and of course, that touches big resistance, and it touches the big low in June, which is right before the euro really took off on the upside. So near term, obviously, we've had good levels, I guess, to play on as far as a very short-term scalping basis. NFPs spiking into the median line at the channel. Okay, coming off that, got a new low yesterday. Did not, really extend through that. You can see the circle here from the chart last night. That's where, you could see some support at 1573. Again, I'm in the same position here, the same boat that I was with, or in, excuse me, with DXY. Do we get one more push down to this, 14s, right? A 14 handle, 114 handle, or are we going to try to, make a bottom here, right? There is the drastic divergence on the 4-hour RSI right now, which you can see, of course. I haven't seen a whole lot as far as, extreme sentiment stuff, like, predictions on the euro about to tank or anything like that. I haven't really seen much of that yet, but we're getting, momentum, if you will, not really confirming what's going on as far as the euro coming off. But, just like the dollar, the head and shoulders top that you do have here is indeed a head and shoulders top, okay, and you've rallied and retested it, so there's a clear path to the downside. But my worry, or where I think actually the better setup would be, is if you actually get this to be a false a false break on Head and Shoulders, and I think that's a possibility, of course, because of everything that I talk about with the dollar. Okay. Now look at where today's high is, which is the 116.11. It's essentially the 2016 high. All right. So in order to get bullish on this, what you would want to see, or what I want to see, is for euro to trade up, back up to say 1650 or so, right? Maybe make a little bit of a base. Okay, maybe get something on the positive slope here, right? You could envision a fork like this, and you'd have yourself something of a double bottom to start this back on the upside. But until then, kind of clear as mud here. Okay, I don't have strong conviction either way. I do think that there's opportunities to be short euro in some other places, euro yen specifically, which there's still an order in there. Dollar yen. It's dollar CAD. Dollar yen. Here we go. So dollar yen. Ton of resistance up here. And obviously it's Wednesday, so we don't have a completed weekly candle here yet, but you can see if the candle on the week were to end like this, or hell, even if we were to trade back up and close near, where we opened the week, which we opened the week at 113.98, to me this is very toppy looking. I mean, a ton of resistance on a horizontal basis. COT, by the way, folks, there's a big time Japanese yen short position, okay, meaning dollar yen long position on the specs. So it is really one-sided at this point. I think I can probably pull it up here for you and show you this. Let's take a look here, COT. Okay, here you go. You can see that the speculative short position is basically where it was back here in July, right? And other than that, you've got to go back to October 2014, which did end up, that if you recall, this was BOJ going guns a-blazing right here back on that was the BOJ meeting on Halloween 2014. But before then, you did have a big move higher in dollar yen. Okay, so it doesn't, necessarily. There's just, my point is the positioning here is a strong impediment to dollar yen, basically moving strongly to the upside. Of course, the most important thing would be the chart levels, at least from my vantage point. And you do have a trend line here. This is log scale, and if you connect the June 2015 high with the high from December 2016, this is what you get. Okay, and that of course was touched Sunday night. That's another thing that I do like for this trade to potentially work, is the fact that it was a Sunday night high, right, on kind of a newsy type of exhaustion thing. You had, I think Kuroda or someone came out, or Abe said something. Someone said something, with Trump there in Japan, and dollar yen spiked quickly on Sunday night in thin conditions. So since then, it's obviously been fully retraced. We were just trading at the lowest of the week. And to me, keep this chart in mind, because I think the big level to pay attention to is down here, right? Basically going to be near the 1160 area, right? Maybe 1160, maybe 112, something like that. But on the longer term chart, this is where I'm looking. So, running this short position right now, I understand that, we've come into a spot. Maybe we can, bounce from here or nearby. Two equal legs is pretty close to 20-day average, around 1330, and you do have a parallel down there. Next spot would again be about 1265, which is 618, and that's the lower parallel. So the two biggest levels to me on this chart, probably 1265, and then that 1160 area that I mentioned, you know, from the bigger picture chart, right? And you can see you do have a head and shoulders of sorts here, okay? You know, shoulder, head, shoulder. So tough to get where you would actually draw this because there's so many spikes on it, but essentially the target would be more or less in line with the 1618 down at 112.70. So, you know, with this, would like to obviously see us kind of fail around here, looking at it. You know, this magenta line, we can go granular here, look at a 60-minute chart. Here, but here you can see resistance, or sorry, support back in mid-October. Support again, right, at the very end of October. This was BOJ actually. And support yesterday. And now here we are. So, you know, really you'd like to see this, you'd like to see dollar yen kind of fail now, right? I mean, we could poke up again another 15, 10 or so pips, but really this is where you want to see us fail based on the progression of this slope. And let's touch a little bit on that too. When you have a good slope like this, you can learn a lot about the market's momentum and possible intentions without throwing on an actual momentum indicator. So, you know, look over here when we were supported here, right? And then it was resistance. But that Sunday night spike never made it up to resistance, right? That Sunday night spike, the resistance would have been 115.09. It's a square root level. It's also the parallel that, you know, the red parallel that was so good as support and resistance for several months. Now, the fact that you did not go up to that level, remember, that is what we call, you know, kind of in slope analysis, we call it a gap, right? Now, but that can get confusing because, excuse me, because gaps obviously are very common or, you know, known by a different thing, right? The market price opening above or below the prior session's close. But in this case, we call it a gap because you did not get to the level at which the market had been responding before. That's a divergence. It kind of warns of a behavior change, right? And then the fact that we've broken this line now, magenta, tells us that indeed the market has changed behavior, okay? So this actually gives us, even though we're not trading within a downslope on this chart, the shorter term chart, excuse me, it does tell us that, you know, just those observations tell us that the market behavior has indeed changed, all right? So I do like staying short dollar yen, again, especially if we turn down right here because this was the old support, 3 different occasions since really over the last month, okay? So there we are with dollar yen. Now, of course, adding to this, this yen story, this is why I want to go to the metals next, right? Because we know that gold and silver, but particularly gold, you know, they kind of have a decent relationship with Japanese yen, right? It's loosened over the last couple of months, but there is a relationship there. So let's go to gold. Close this one. Okay, I'm going to start with an analog. Okay. Back 1996, the drop in the bottoming sequence. Okay, if you copy that and take it over to the high from 2011, and you do have to stretch it, you have to scale it out. The shape is the same, but it's, you know, there is it's bigger. The current situation's bigger. So you stretch it out, you can see here, okay? That's how it works. So just so you know what I'm doing here. And you can see how well this has followed, right? It was right on the 2015 low. It was December. And we're getting into that time of year where you can get turns higher in the metals, right? You're getting into a more of a bullish, favorable kind of situation, environment, season, from a seasonal perspective. So, with analogs, it's not always necessarily the direction, it's the turns too. So if you look at the turns, look at what happened back in June, right? Bottom in the analog, bottom in the market, current market. Into that high when everyone got really bullish and we took out the election spike, right? That was a turn down. Sure enough, we turned down, right? Turned down the analog. So when that happened and we were still following, I said, well, you know what? I think that the next turn is probably going to be at some point in mid-November. So that, to be exact on it, we're talking about going next week. The amazing thing about this is, remember the dates for the dollar turn. It's the same date. It's the same date. So two totally different methods, two totally different, comparatives, right? That dollar analog's back to 94. This is 96 gold. We're looking at two totally different things, and yet they both come up with a turn in mid-November, okay? So it's all lining up really, really well. Now, just so you have this, front and center for the next few months, what this is telling me is that you could kind of maybe double bottom in gold down here, okay? Because you could get a turn higher, trade up sharply, say for the next, 3 to 4 weeks in gold, but then fail again, come back, and then make an early January low before things get really exciting again, all right? So there is that gold analog. Now let's go to a gold price chart. Now, I noted, maybe it was in Sunday's update, I'm not sure, but the GLD, which is the ETF, is actually charting a bit better than gold futures or the gold CFD, right? The fork is much cleaner. That's probably because it doesn't have some of the overnight, price extremes. You got to, this is only U.S. trading day prices. So it does chart much better, and so I'm going to follow it, okay? And the fact that we did turn up right on this parallel, and now we're back above the median line, right? That puts us in my opinion, puts us in a pretty positive environment for gold, okay? So let's look at this. Resistance on the median line, support on the median line. This is back in 2016. Okay, lots of trading around the median line, but look at the last time we really had a good, strong move higher in the gold price, right? Similar thing. You failed on it, pulled back, surged, pulled back on the median line again. So I would watch for something like this on the near term, okay? You get a shot higher, and maybe you come back down, test this. Oops. Right? Something like that. That's kind of my thought process for gold right now. Just know that, you're in a positive environment. I very much like how this is acting. So 200-day average here too, okay? We could look at a shorter term picture, of course, for gold. This would be the CFD, and you can see that you do now have a series of higher highs and higher lows, excuse me. So let's throw on a shift fork here and see if we've broken the resistance from it. Doing a shift fork, because that would be the one that would give you the flattest slope. And we have yet to do it, so we're really close. Okay, this is important to pay attention to probably, over the next couple of hours, to be quite honest. You can see on the median line on the shift fork, lots of support, turn up. This is now your test. Okay, so let's firm up through here, and then would be much more, you know, confident, I guess, in a broader dollar turn, so to speak. But there's still a, a last gasp resistance here, I guess, for gold to get through. All right, so there's gold. Certainly an improving picture there, in my opinion. Silver. Silver, the futures actually chart extremely well. Actually trading right at the 200-day right now in silver. But here's that silver picture, right? This close, remember that's 10-6, that was NFP day from October. That was a, that was a high volume day, and the fact that we've, we come back and we've held it first on Friday, which was another NFP day, and then of course on Monday, to me, again, that's a very positive sign. You're at the 200-day now. You've got just a great, beautiful slope to follow on this, and I'm looking for silver to turn higher and maybe go on a hell of a run. Here's why. The silver analog that we've been looking at says that now is essentially the time to do this. Where is it? Show up. No, not there. Hold on. Okay, here it is. Weekly. So this is simply a comparison with the low from 2001, and it's overlaid, and it's actually not at all stretched or anything. So it's completely, it's just literally overlaid with it, completely copied. So you can see, again, it's not necessarily the direction, it's kind of the timing of the turns, right? So turn, 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 positive environment. The big one for me is this one, which was, remember the flash crash in July, turn, turn, and then now turn. So this is saying that you could be in an exceptionally bullish silver environment really up until April, before things get, kind of hairy again. So that's, yeah, that's what I'm looking at with silver. And don't forget too, silver is testing not just the 200-day average, it's also testing the 200-week average. Okay, so there's a lot of stuff here that could, you break through, that you could really send silver on the up and up in a quick manner. Again, this all goes back to the dollar story, in my opinion, right? You're very unlikely to have a very strong, environment on the upside for the metals, gold and silver in particular, the PMs, precious metals, if you don't have the dollar kind of, taking a dive. So that's how I'm looking at that, trying to make sense of this market, which is not doing a whole lot, as we know. Okay, here's one for you. Silver divided by gold. So in a rising metals environment, silver typically outperforms gold, okay? In other words, the silver to gold ratio is typically going higher, right? In a bearish metals environment, it's usually going lower. This is the silver gold ratio, but if I just put up gold over it, you can see what I'm talking about. Generally speaking, right, a rising ratio is bullish for both metals. Okay, not always, very general statement, but you get the idea. Okay, so what we want to see then is positive action in silver divided by gold. Well, amazingly, you have a 5-wave rally in silver divided by gold. And you also have a choppy 3-wave correction. That C wave is even 5 waves itself, 1, 2, 3, 4, 5. Okay, since then, not exceptionally clear to me. This is obviously not a 5-wave move up. It could be a series of 1s and 2s, whatever. But this, 5 up, 3 down over the course of, not quite 2 years, almost 2 years, because this is February 2016's low. Watch the 200-day average and the ratio. Okay, you get above there, again, prospects for metals improve markedly, in my opinion. Okay, so lots of information here to suggest that, you know what, the metals might be their time to shine. And if we go back to, if I show you the seasonals, show you the seasonals for the metals here, you've actually got I have the gold data saved because when you look up the futures data, you get the drift from the rolls, and it just totally screws you up. All right. So you can see that on every look back period, so 30 years, 20, 15, and 10, you've actually gotten something of a seasonal bottoming point. 5 years, it's been straight down until mid-December, okay? And obviously that's a function of the fact that over the last 5 years, for the most part, gold's been in a downtrend, okay? So if we look, past the last 5 years and go to, longer look-back periods, you actually tend to go into a bullish gold period now. So again, if behavior's really changed in the gold market, there's another kind of piece of the puzzle that is kind of pointing higher. All right. Why don't we look at crude? Then we'll look at some currencies, kind of switching it up today a little bit. Then I want to look at some yen crosses, because those are some of the opportunities that look interesting, right? Euro yen looked at last night, pound yen potentially, and then I'll take some questions. Oh, Mahai says, I cannot stay any longer. Will you please talk S&P DAX? I will listen later. You got it, my friend. I will do that. So we'll do that as well, and then Mahai can check it out later in the archive. All right? All right, take care. Have a good day, my friend. Okay, crude oil. We're going to go to crude. So we've broken out, right? 200-week average, as noted here, is really close. You can see it's a pretty important average. Coming off of big lows, you've seen it. But what I'm showing you here is actually, and we've looked at this before, but kind of haven't looked at it recently because crude hasn't done a whole lot until the last couple of weeks, where we're finally breaking out to the upside. That 200-week average, I'd really pay attention to that, folks. It's a biggie. Okay, 58.70. A little less than $2 higher, you can start to get something nasty on the downside from there. Even if it lasts a couple of weeks, you can get a sharp pullback. But what we've done here is we've overlaid the price action from the last big bear market in crude oil, which was from 1990 to 1998. That's 8 years. Okay. Well, you know what? 2008 to 2016 is also 8 years. And what happens when you overlay this is you will see that you have, it's not nearly as close as, say, the gold one that we looked at, but there is something here, shouldn't be completely dismissed. So you do have some big turns as far as, look, the top, okay, bottom, right, top in both. Even kind of the midpoint of the decline is quite similar, right? Not perfect, but it's similar. And then you do have some, the bottoming is a little different because you made a new low back in 1998. You did not, but the timing is similar in which you got the secondary lows, right? The difference, of course, is that you went really hard up more of a V bottom back in 1998. That didn't happen this time around, right? And we've seen this before when we look at the DXY. If I look at the DXY analog, specifically the comparison between, I'm taking a little detour here, so excuse me, but if we look at the okay, so if I do this and match this over, right? You know, back in the bull market and the dollar in the 90s, it was, you know, you had more of your gains in this part where this was sideways, right? But it still matched up well as far as the next leg up and the timing of the next low, right? And the next leg up and the timing. So you don't want to completely just, you know, say, well, this isn't working, because it could work at a later point in time, all right? So this, you know, gets me to the point that I'm trying to make right now, is that, and here, you know, bottom in the analog, bottom in price, okay? Top in the analog, top in price. So we are very close to, you know, or more or less, you could say we're at, or maybe a week away from a potential top in price, and a pullback, if this continues to follow, that could be pretty sharp, and it would last maybe, you know, 3 to 4 weeks. All right. You know, crude oil puts that go out a month, you could probably do pretty well if you get a decent resistance, you know, pullback off of this 200-week average at 58.75, right? So I don't think we're quite there. Again, that 200-week average is a little higher, but you get what I'm saying here. And then, of course, higher into May or June, which incidentally is actually one of the peak levels or seasonal turning points in crude oil anyway. This year's seasonals in crude were the exact opposite of what they usually are. Typically, you have strong crude first half, weak crude second half. I mean, it's the exact opposite this year. So we'll look at, you know, this, especially this weekend, the COT figures, they've been pretty elevated as far as the specs are concerned. Being long crude oil, I can only imagine that they've actually significantly increased over, you know, the last week or so because of the breakout. So just something to be aware of there with crude oil. All right. All right. Okay, now to the currency stuff. Actually, I've got one more analog if you're interested. Coffee. This is the coffee chart, weekly chart, okay. Had noticed that basically from 2006 onward, the turns and recent price action really match up quite well from the 2014 high. And if I scroll that in, here you go. So I'm looking for a coffee low next week, maybe next 2 weeks, and a sharp rally up into February or so. So I'll leave it there, but that's, you know, another one that I find really interesting. And this one especially because the speculators, I think coffee may have just gone to a new record on speculative short positions. Again, that itself doesn't mean everything because, you know, records can stay for a while, but yes, they were. As a couple weeks ago, they were. There's a new record. Okay. So, you know, records here. Now, sometimes it takes a while to bottom out, right? You know, in 2013, you got a bottom pretty quickly, and the market really turned up sharply. But, you know, add the analog to the COT, and to me, it's a pretty compelling case, or good reward to risk on the long side for coffee. Okay, back to currencies. Aussie dollar. Kind of looking for that low. Down, 76.10. Would be open to maybe a run on the July low at 75.71. But this is the big area to watch, okay? And talked about the potential for a flat pattern, right? So this is a clean as day 5-wave drop, right? Maybe you need one more drop here to make 5 of 5. Okay, 1, 2, 3, 4, 1, 2, 3, 4, or this is all 4, and then one more low 5. But whenever you have, you have a 5-wave move, you got to look at the preceding move into the high. So the move into the high can't really be counted as a 5 itself. In fact, it counts as a 3. So since it counts as a 3, go back, here's the 4-hour chart. This is the one we're looking at. Since it counts as a 3, right, this is probably something like an A, B, C. In other words, everything from over here counts better as a flat A, B, C, right? So irrespective of, say, what happens over the next couple of days or whatever, to me, I'm on lookout for a much more important low in the Australian dollar. All right. Certainly, when it comes to the commodity currencies here, confusion kind of reigns. If you were to tell me that before the year started that copper would rally 26% by, November 8th, I would have told you that the Australian dollar would probably be near 85 cents. Well, obviously that hasn't happened, right? The linkage or the relationship between those two markets, the Australian dollar and copper, has kind of gone away, right? I mean, it just has. They haven't, moved together really hardly at all. So the importance of looking at each market on its own merits, of course. Is Kiwi dollar about to go opposite of Aussie dollar again? Maybe. Again, we've got a huge level up here. 20-day average is now 69.70. You've got the 2015-16 trend line. You're all familiar with this chart, I know, and maybe sick of it. But there's also the underside of the corrective channel here. Again, just draw the line off of the highs back from July and September, and you get yourself a confluence of confluences. I mean, this is huge. So RBNZ's later today, okay? I don't know what they're going to do, obviously, but if we're lower, maybe an initial spike into this, and then Kiwi could potentially fall apart. So that's what I'm looking at. The alternative, of course, if we scream through this and go higher, to me it's back to the drawing board. You don't always have to have an opinion on a market, but as of right now, I'd be looking for failure into this level and then lower. Okay, that's kind of how I see the New Zealand dollar at this moment. All right, dollar CAD. Again, bigger picture. Was obviously hoping for a little different resolution here. Was looking for maybe a, A, B, and then 1, 2, 3, 4, a push up into this 29.69, 130 area. That's just such a big level. I'd love it. I'd love it if we can get up there and we can short it up there. Here's another linkage that's kind of gone away of late. My guess is it probably comes back into play at some point, but that is the crude oil dollar CAD link, or crude oil Canadian dollar link. During this whole period where Canadian dollar was strengthening early in the year, crude oil wasn't doing a whole lot, right? I mean, crude did bottom right here, but it did not by any means go on a rip-roaring bull market until recently, right? And this is after you actually had Canadian dollar weakening substantially against the US dollar. So again, from a macro perspective, a very different, odd type of year. I don't know if this is here to stay or not. My guess is that things probably come back into line at some point, right? After everyone proclaims a new paradigm, a new whatever, things typically, you know, go back to the way they were before. But again, it really drives home the importance of studying and trading each market on its own merits. I can't say that enough. In any case, kind of lost in the woods right here with the Canadian dollar. Don't know if we're going to get back to this level after, you know, the extent of weakness we've had. So when I go to the near-term chart, I see, you know, or looking at that chart, excuse me, you certainly see good potential downside, right? Within what is essentially a very long-term bearish channel, and if we're going to continue to trade in that channel, you know, we could be headed, I mean, substantially lower. Okay, you could be mid-teens at some point. Okay, it could be a lot lower. So on a near-term basis, I don't want to get too caught up in saying, well, it's not perfect, so screw it. On the near-term basis, you know, was this enough for the 5 and the C? Okay, that move yesterday did not quite get 28.35. Is this A, B, or are we kind of right on the bottom of B, and one more push higher gets us up into 28.35, maybe a little higher because of this parallel, red parallel here? But if I go to the 4-hour chart, right, based on the original slope from the September trend line, connect off the highs, this to me is your ideal spot for a short opportunity, right? With the, you know, again, understanding that we might not actually get down towards or get up towards that 200-day average, right? So I don't want to miss a big time dollar CAD short just because I'm waiting for, you know, 100 pips on the upside when we might not get there. Okay, as it is right now, we're actually sitting on a pretty decent level. Okay, let's go to some yen crosses. Then I've got to do S&P and DAX, and really kind of running out of time probably after that. But, you know, same deal here. I want to be short euro yen. I think dollar yen might be a better short. Again, that's based on my, you know, kind of thoughts on the dollar generally. But you've got a clean bearish structure here. You know, you got the double top along with kind of a head and shoulders top. I mean, it's kind of a textbook setup here. And don't forget, you had a weekly J spike in euro yen, right? And we've shown how big these things are, but this is a hell of a turn, right? Has identified some really big turns over the last 6, you know, or so years. So, you know, here we are. Didn't follow through last week, might be about to follow through this week. You know, your target on here is really below the September low, and you're looking towards probably 129-ish, right? Pound yen. Is pound yen an even better short? Pound is, to me, probably about the most confusing thing in the world right now, besides my 3-year-old. But pound yen, here's that trend line, right? October, April was support back in June. You broke it, and it was resistance on the way down into the final low. J spike on the low, actually, on a daily chart. Was nearly support on BOE from September, and now we're kind of back testing it again. You know, pound, again, not too clear to me. I'm not sure if it's clear to anybody else, but it's definitely not clear to me. So if I look at a near-term picture of pound yen, the setup here, this is the trend line from back in August, okay, August, September. It was support here recently on this initial drop last week, and then on early this week on Sunday. You've got this, could be considered something of a neckline for a topping pattern. 20-day average is up here. I'd circle this area 149.50. Okay, if pound yen's lower, you probably need to see 149.50 resistance. Other than that, don't have a super strong opinion on anything pound. It's just not too clear to me. I think maybe trading dollar yen would be a better bet here. The levels are a lot cleaner. This is the pound chart. I really didn't even plan on looking at it. But what confuses the hell out of me here is that you actually have a 5-wave rally in pound. 1, 2, 3, 4, 5. Pull back. I mean, pound could be bullish here, right? So again, pound, my head's spinning. I don't really know where to go with it, so I'm probably not going to go anywhere, at least not trade it at this point. And then, of course, there's Kiwi yen, right? That's the other yen cross that looks really interesting. So RB and Z today, of course, Kiwi dollar coming up on its big time resistance, as we did talk about. But the Kiwi yen chart, literally a picture perfect textbook trend line, and you've got resistance holding on that trend line for the last 3 days. Obviously today not doing a lot. Kiwi's probably waiting for RB and Z later, but I'd be looking lower. This is that long-term 2011, 2012 trend line, and that is on log scale, okay? And that's going to be down, it's below the April low, but it's going to be, near 75, 30 or so if you get down there. Now, if you go arithmetic scale, it's a lot lower, right? If you go arithmetic scale, you're talking 72, 80, 73. So this is in my opinion, this is the best looking short of the group for yen crosses. Okay, let's go to some indices. The only stock market that is starting to get interesting is actually the DAX. So, let's see, that's a daily. This is a weekly. Yeah, this is the chart from last night. DAX has come into resistance. Okay, this is long-term 2003, 2009 parallel, and that parallel extends from the 2014 high. As you can see, it crosses a whole lot of important turns, including 2015, May, June of 2017 this year. Last time we had a top, and don't forget the relationship here with the euro. If you start to head lower in a in a fairly violent manner in the DAX, it's going to probably support euro, and we're there now, right? So wave count 1, 2, 1, 2, 3, 4, 5, probably a 3. In other words, looking lower for a 4th wave and then another high. But of course, this is a weekly chart, so this 4th wave would take quite a while and could retrace a decent portion of this, if not the whole thing, from August. All right. So that is the DAX. If I zoom into an hourly chart, let's actually go 15 minutes. You got a 5 down, 1, 2, 3, 4, 5, a bunch of 3-wave movements. Could be an A, B, could get a sharp rally C into the end of the day and then turn over again. This is a 15-minute chart, okay? So first leg's down, 1, A, B, C, and then lower. certainly a possibility, and maybe the cleanest that I've seen it in a while. S&P 500, you know, I mean, kind of not a whole lot to offer here. It's not really doing anything. I mean, this is the weekly chart. Literally in a, you know, 20 handle range for 2 weeks. You know, I'd love to have a better opinion here. I just don't. There's nothing for me to offer on the S&P, you know. What I do think is interesting is that the small caps have started to roll over. So this is IWM. This is the Russell ETF, right? Small cap ETF. And that top was actually back on October 5th. So it's over a month ago. And it started to roll over. I think support on this is going to be on the 200-day average. At least that's the first big test for it. And you've got this parallel down there too. All right. So if there's a market to watch besides the DAX, at least a market in the US to watch, I'd say it's probably small caps. All right. And I'd be looking down towards, you know, down towards 141 or something. 200-day average again, a parallel. There's the high from, what is that, March. So in my opinion, this is the best thing to watch in the US space. Okay, I've gone a little bit over. That's all right. If there's any burning questions right now, I will take one, but I do have to get going. I've got to run. So if you got a question, ask it quickly. Okay, no. All right, don't see anything coming in. Okay. All right, so I'm going to wrap it up then. Again, this was kind of the, you know, near-term stuff, not super clean for me on FX at this point. So this is more of a, you know, kind of a macro webinar today. But thank you for attending. As always, I always appreciate your time. And I'll get this up and archived for you ASAP. Everyone have a great rest of your week, and take care. All right? All right, we'll talk later. Bye.